Yo, what's up, everybody? Good morning. Right. How are y'all doing today?
It's something about having that piece of paper. Some people.
All right, first thing, let's check this out. Make sure all my stuff is looking good here. Looks like we have a rational open. Pretty flat. Market's gone nowhere today. Kind of zoom out on this a little bit. So we can get a nice little, we've had 2 days on the S&P and we have been hitting those red lines. Go ahead and take those out. Like there's the impact red line from the other day. Sure, remove that. Remove that and remove that. All of it. They don't count. Okay. Vixen decay, that's a great sign for a continuation of any bull run for the month term. So at least on the longer term, I'm still pretty satisfied with what I see. Nothing is too crazy here. Like that. What's up, y'all? You don't post, announce on Discord. Oh, thank you. I always forget to do something. I came back from vacay. All right, let's go. Appreciate you, Stan. Let me pop that in here. All right, market opens in. Oh, shoot, 1 minute. Market's open right now. Okay, let's get ready to go. Today on the calendar, manufacturing PMI 15 minutes. What else? ISM manufacturing PMI 30. Construction spending 30. Today's Wednesday or Tuesday? Oh, it's, Thursday. Thursday. It's the holiday. Well, inventories. There's normally a Wednesday thing. Fed balance sheet after market close. Keep an eye out for that. Catalyst today, about 30 minutes. Gonna have a market moving catalyst ready to go. Oh shit! I didn't even open my trading platform. Life is tough. It's so hard. Good to get back in the swing of things, so. All right, so our liquidity maps pop up. See what we get. Out the door resilience is nice and steady. Just double check QQQ and SPY really quick inside the redistribution zone. We are pretty solid here. Bottom of the zone. Resilience is coming in positive. That could be interesting setup here. Let's see if we get those. Ooh, BLU, perfect. Okay, BLU Q's 347.5. That's good. Our bear long up, so basically scalp city here. Come on, stop. Turn off MHP so I don't have to see that. Make sure it's way down there. Okay, good. SPY hedge break right out the door. Close price. Ooh, I'll let this settle out a little bit. No trades, yeah, nothing. Oh, my pop room's not even open. Nothing on my nothing anywhere. Not touched this yet. Very interesting setup here. 2 hedge breaks to the downside. It would be nice to have SPY long on hedge pressure to break up to DD, but of course, hedge breaks with negative resilience. Not really the best sign in the world. Let's make this a little bigger so we can see this resilience here. DD coming in nice and strong. So from the middle, tie break is to the upside, usually. But that negative resilience now, resistance is at the close. What a great day. This is very unexpected. Very unexpected to sell so hard at the open. There must be something going on right now. So keep an eye on DD, make sure it doesn't collapse, but bear zone to bull zone is a nice little scalp so far. Actually, QQQ rescued itself on its hedge break. Russell just tanking. We get VIX really quick. That was odd. A very odd open. I definitely don't want to touch this. This is great for VIX. Bear short down. Everything looks good. You want VIX to be in decay for a bull market. So, with some deterioration on DD. Since the open went from about numbers coming in closer to about upper 7s. What do y'all think about this? Help me out here. That limit not full approved. Most of the jobless claims this morning as well. Let's analyze that really quick. Hit that like button if you guys and girls don't mind. Thank y'all very much. Continuing jobless claims are still elevated, so there's still a lot of people, you know, they're not, this moving higher and higher is the high overall unemployment, you know, with that. And with JOLTS coming down as well, more people unemployed, less jobs available, which means competition for wages is going to be high. It means people are going to be willing to take very massive pay cut once that desperation kicks in to get their job, because there's not that many jobs out there compared to what it was a year ago. This is waves. We've been seeing these waves of unemployment at the beginning of the year. And it's a little spotty. Like, it's not having that kind of wavy feel. It's just kind of high. People are like, you know, it's like every week or two some companies announcing. It's pretty random. So these are this is your essential, from like the end of last year to now, your essential employees that are getting laid off and hurting, you know, productivity company and stuff. So not necessarily the best sign to keep seeing people laid off. Only for the economy. This is great for inflation, to see people laid off and jobs coming down. So jobs coming down and people being laid off is great for the economy. I mean, not great for the economy. It's terrible for the economy. Long term, that's bearish, you know, recession era numbers right there. More people unemployed, fewer jobs available. It's typical of recession. In the short term, though, you know, that brings inflation, the wage part of inflation, down a little bit further, which means the Fed is less likely to be as aggressive. You would think that would be bullish short term. The fact that we move like this means it's probably not related to that. It's probably has to do with that ceiling, like you said. I don't disagree there. When was that? Last night? Yesterday? Dead limit not full approved. Something came out yesterday. Fill me in, because I was driving most of the day. I'm reading right now. So not fully approved yet, right? Highly unusual today, guys. Very weird. Very weird. So let's draw it out. I'm just kind of... I didn't expect this. My finger didn't even get close to the button to pull the trigger on this. It just looked weird out the door. You moved up, collapsed through hedge. Now you're down inside of here. Let's start writing everything that we know. Okay, we're in type 2 res, which means we're outside of the box. Res less than 0, there's your resistance. Okay, now you're inside of a mean reverting level from the middle once you're balanced. So let's say this, right? Here to here is a scalp on positive DD. Okay, since we're irrational DD greater than 6, this is what I'm looking at. Here in the middle. So, at least to there from the tie break. But it doesn't mean it's not a long signal from here. The idea is from bear zone, you're going to want to meet in the middle somewhere if DD is bullish. If stocks are bull zone and S&P's like in this bear zone. It doesn't mean like I chase this green candle. Anytime I long off of something to somewhere else. I don't take momentum trades. So far, so good. So like, ooh, green candles, maybe I should long. No. Doesn't mean that. Doesn't mean at all. It means if S&P's trading in the bear zone, DD's bullish, I'm going to at least trade it to the middle and then maybe to the other side. So this is a long, why I break it up into two is a longer trade. There's a scalp from here to here, and if this was as close as we're going to get to it, then you could see that pressure. That has everything to do with that. Easy to see. Appropriately so, I trade from the idea that if I open in the bull zone, I usually close in the bull zone, right? That's the rule. So at the end of the day, probabilistically, it would want to close here. But with all these other irrational signals, I'm not really going to bet on that anymore. At best case scenario, down in here, we're going to probably kiss it and come back. So that's why I do it like that. The balance trade means that if we bounce here, it's going to spend all day, and maybe by the end of the day, that pop is going to happen. So a lot of times these two wave happens at the end of the day. But normally, bear zone to middle is a great part of a scalp on a DE play when you drop from one side to the other. Now, again, if it's trading down in here, I'd be very suspicious trying to long this for a long period of time. You go from bear zone to bull zones, one of the vice versa, one of the rarest things ever. And so this being strong enough means that this is going to try to make its way higher before lower. We're not getting good sharp pivots though. So likely today, with all these catalysts coming out, I got PMI coming out as well, right? So this is going to be like a pretty busy day. Yeah. So anyways, so right now the S&P, like this is very easy. If we break above hedge pressure and resilience goes positive, I'm gonna chase along there. I mean, that's a no-brainer on that one. That is the easiest setup in the world. If all this shit recovers on a catalyst and we break through 418, I'm gonna take a long. I mean, that's extremely easy to see. Does everyone see why I would do that? No reason for me to try to jump in. And now again, I've stretched this out a little bit. This is only 10 points of range right here, right? This is only 10 points of the ES. It's not really worth jumping in all these risky areas with catalysts coming out. Or up here, baby, I'm taking that long. Easy peasy. Super easy. So I'm going to wait on that. There's no reason not to for me. So let's wait on that. Give the market some time to recover. Nasdaq resilience just popped above 0, which is looking pretty interesting. But the S&P is going to call the shots like always, so we're going to wait on that one. Let's check IWM really quick because somebody was asking about that. IWM is the stronger of the three because it's not having a hedge break. It is opening slightly with the bear setup, though. Maybe not the stronger of the three, but the less irrational of the three. Looking pretty stable. Illiquidity pocket, so it's going to have some volatility here. And of course, you know, looks like there's limited upside. It's going to take a catalyst to get a rally today. So it looks like today, IWM and most things, I'm going to call that it's going to be a limited upside move. And unless there's an event off of this PMI coming out in a few minutes, I don't think that we're going to move today. Pardon me, manufacturing PMI, 3 minutes. Why am I itching my throat right now? It's gonna be mildly important. The one at the turn of the hour is gonna be the more important one. So you're gonna have this ISM number at the turn of the hour. Let me show you something. It's been interesting the way it's been playing out. So this is what helps you forecast the health of the economy in the future. This is everything related to the logistical chain of like a company, right? This is the survey on a bunch of businesses, 400 different companies. They look at the new orders, the backlog of orders, new export orders, imports, production. Look at every piece of the logistical chain, right? So what you're going to be really concerned with is going to be like new orders, essentially, right here. Because we're in this like weird, we talked about this last week on some podcasts. We're in this weird environment where companies are like stockpiling inventories slightly higher again with higher prices and like demands coming down a little bit. You're starting to see these weird effects, and then the new orders coming down is going to be a big deal to show that companies aren't necessarily like selling these goods fast enough. It's kind of one of the things. So we're going to keep an eyeball on that report and watch those new order numbers come through. Let me show you this. You're gonna look at this, and you can break it down one at a time. To me, this is the more important of the ones. We've been, you can see that there's generally like during the inflationary period post-COVID, the new orders numbers were coming down and down and down and down, right? We had a shortage of goods and then a surplus of goods, right? And then now we're starting to get back into this era of, okay, now where are we right now? Are we going to start seeing more and more new orders? That's great for growth, right? If these numbers come down, it means just in general, commerce is slowing down. And you can see exactly what it does during a recession, right? I mean, it's very easy to see them all. Here's the 2000 dip. Here's the 2008 dip. You can see that when those numbers are coming down, it's just general recession-ish mechanics. This is a thing that you don't want to see coming lower. So this number comes in. The expectation's pretty flat-ish relative to what it's been printing, around 45. But like I say, if we start coming in the low 42s and things like that again, and the market's going to flip its shit on any number less than 44, for sure. So be careful on those numbers. Those are the things that you're noticing. They really prove the recession that we're in. Got a really busy day today. We got like 25 meetings, I feel like. Wait. All right, let's take a look at some stock plays. Let's look at the illiquidity pocket. You guys, make sure to go grab the extended trial rocket security if you haven't yet. We'd love to see you in here, checking out the platform. You can do the same things I'm doing here. Let's go up in here. Let's pop up some bull setups. See if there is anything. Wait a minute. Did I select BSU? Oh, I did. Okay. Okay, cool. So yeah, BSU is an interesting setup. So Tesla's a good gauge today for one of these particular setups. BSU is one that balances off of bull zone to middle. So if you think about like a potential that the market could fall further, my brain sees it like this. Okay, there's a scalp off of here. So if we get some really bad news, the market in some stocks, I mean, I was coughing yesterday too. I'm getting sick again. Get tickle in my throat. So you can see that there's some support in some of these kind of better stocks, a little bit lower, but not necessarily like in collapse mode. So numbers just came out, I think. Manufactured PMI came out 48.4 and a 48.5. But the ISM number is going to come in a little hotter. That's the one that moves the market 13 minutes from now. What's up, y'all? Good morning. All right, nice and clean day, nice and steady. You guys, everybody here, scroll down right below that video feed, click that thumbs up and that like button real quick. Give the old algorithm some love. Make that your daily single chore. I crawl myself down here to stream. I walk down 4 flights of stairs, give myself a calf workout. Y'all can give yourself a click a button workout. Yeah, I think that we're gonna get some moves off of this little 4 flights of stairs through the snow, both ways, being chased by a bear, carrying a stack of lumber on my back, and 2 rocks to bang together to start a fire. That Barbie made me LOL. That was hilarious. Interesting to see. Okay, Tesla, Nvidia. Let's look at the darling children of the stock market. Both in bear short up situations, and Nvidia's is even weirder. So you can see, obviously Nasdaq is fighting to hold it above its half gap. You can see right here Nvidia being one of the stocks contributing to, right, this. But the rest of the markets are down. Let's take a look at the sectors really quick while we're chilling. While we chilling here. So nothing until this event comes through. Comms, financials, materials. What stocks are doing good today? The DPG. Pretty decent movers there. 2%. Sorry, that's 2 points. Look at the wrong column here. Dollar General getting crushed today. Okay. They have earnings. Yeah, they had earnings. That's why. Your staples companies, Target's still dying. Let's check on Target real quick. I'm curious how that's been going in light of current events with Target. As y'all know, they're in the same hot seat from a trader's perspective as the Anheuser-Busch company is over the political messages in their stores and ads and all that stuff. So we're gonna figure out. Target's just dying. It's curious. I haven't looked at the chart in a while. I was curious to see if it was still having its downside. It's pretty heavy in the staples category. about a 1.3% weight. I'm sorry, a 2.83% weight. So it's probably one of the bigger ones. Yeah, it's definitely in the top 10. So that's hurting this for sure. CO2 report? Yeah. Oh wait, hold on. Okay, 52. I'm glad I didn't open my platform today. Not yet. Okay. One of these days, I'm gonna have the entire world trained on this report. Okay. 2 major relationships. Okay. Green right here. Just imagine the word your net long. There's my pencil here. These are your net longs. Okay, your asset managers. These are people longing the market. They're buying stock and selling stock. That's all they do. These guys are going to be your commodity pools and other things. In a general sense, they long and short, but the position they typically take is a net sum of things because of the way this category contains certain type of hedging vehicles that traditionally is using futures to be the short side of some kind of more complex bet. Long story short, this is your net short. They're going to short and not short. So usually green line's above 0, blue line's below 0. So far, so good. And then your red is every big bang. I think you write the word big bang. This is your market makers, right? Banks. Market makers, dealers. Call it whatever you want. Okay, so far so good. All right. 2 really easy things to take away when they're doing this. These 2 relationships, and this is from the video. Markets are liquid. Put the word liquid here. If they are doing this, it's illiquid, okay? So essentially, this is math. You guys all understand this so far? This is a net position of all people in this category. So if I were to report my position, I said I have 100,000 of something. I report tomorrow I have 150,000. I added 50 to the pot of all people. So the green line has been going higher and higher and higher with a few dips since October, since, you know, Papa Bear called the bottom right out here. Genuine buyers, literally in my tweet, genuine buyers, look at that. These are people longing stocks, 401ks, pensions, you name it, mutual funds, they're all in that category. So longs are becoming more long, check. Shorts are becoming more short. When the line goes down, it means people are adding money to the pot. I'm longing means I'm buying a stock. I'm shorting means I'm shorting a stock. So as the lines are pointing away from each other, buyers and sellers are trading against each other. If they're pinching together, it's the same situation, just the other way around. So an example is green line going up, this person's becoming more long. Green line coming down, the long is selling their longs and going back to cash. This is the short becoming more short. This is the short covering their short and going back to cash. When they pull away from each other, the market's this is the highest liquid. So if you're to put like liquidity, this is more liquid than that, but they're both very liquid. The reason why is because there's more traders. Number of traders higher. Right? You have more people shorting, more people longing. It's more people stuffed into the room. People exiting a trade as sellers, people exiting a short as buyers. So covers and sellers meet each other in the middle, but it's fewer people trading. It's people exiting the market, going to cash, but still liquid. So every buyer and seller find each other. They're just rushing away at the same pace. So far, so good. That's how you read it. When you have everybody selling and shorting at the same time, it's a liquid bear. Everybody longing and covering at the same time, illiquid bull. So now we come through and look at the yellow and blue and see what we really got. Okay, you have, you know, waves of blue like this, and you're kind of sitting here and it's flat-ish. That's pretty decent. So that shows there's buyers stepping in, buyer and taking profit, buying, taking profit, buying, and still buying. The blue over this period of time, I'm drawing all the way back to October, right? Fanning out. There's some big cover like that. And then now it comes down like this and is sitting there kind of like that. Okay. So since October, you have that very liquid buyers and people shorting against it. Then everyone runs away from the market. We can just see this is very liquid, right? and pretty much almost all points of this, they're either fanning out or pinching in, right? Everyone sees that. So liquid in all senses. So rule number one of the commando traders is liquid markets do not crash. Ever crash. Anybody that's doing this, unfollow them on Twitter and save yourself years of headache following a moron. Liquid markets do not crash. They don't. You crash to rapidly search for buyers when everyone's selling. If the market's liquid, there's your buyers. There's your buyers. Liquid markets do not crash. It's rule number one of life. Okay. All right. Number two. When dealers are net positive, again, markets do not crash. Dealers are holding the bag. You put the two together, you have a liquid market and dealers holding the bag. There's two reasons for it to not crash. And there's two reasons for you to call a bottom back in October and amount all the people fighting to short this and fighting to short this and fighting to short this. Why is it rallying? Because you're a moron and you know how the stock market works. That's why it's rallying. Because everyone's long the market. There's more market participants now than there have been since years ago. There are so many people throwing. If you add the absolute value of the blue and the green together, like if you were to take this number and add the positive atom together, they are amazingly liquid. There's so many people throwing their money in the stock market. It's unbelievable. And then the dealers are still holding the long. The market's never crashed, and that red line's been above zero in the history of this report. So that's it. That's how it works. I've been watching newbies since October. Still shorting and still shorting and still shorting and still waiting to short. You're waiting quarters at a time for those dealers to unload that bag. That's just experience. You see normal pullback as always. Yeah, the commitment of traders couldn't be any more supporting of a bull market. It's extremely bullish. Extremely liquid. That's why you're not seeing giant red candle days like we used to. You're not seeing days like this anymore. You know why? Because back in June and July, the market was illiquid. You got to rapidly drop price to find buyers and sellers. Look at June and July. Tell me what you see right here, and I love teaching this. Tell me what you see, and I'm going to get back to looking at the charts. Tell me what you guys see right here from January to July. Remember the diagram I just drew? And so we'll throw a little Control Z up in here. Yeah. Does this look familiar? Right here? Is that, as we call that illiquid markets, right? That's why you would see back in June, July of last year, the selling was massive. You have days where the S&P would lose 50, 100 points like that, and you don't see that anymore, right? So like the trading has been beautiful this year. It's completely liquid. You're going to very rarely have just red collapse crash days. There are buyers and sellers all over this thing. And so the volatility is down. When liquidity is up, volatility is down. Look how tight this is trading every day. Every dip's getting bought. Every rally's getting sold. And it's really going nowhere, and it's just inching along to the bull side as dealers are holding the bag. It's pretty easy to see that, right? ISM came in below expectation, and I'm waiting for that to come in here. Look at this number really quick. Where are we going here? I'm more curious in seeing the new orders number is down. Okay, these are the bad. I said the market's going to shit itself if these come in bad. At least the new orders. This is future stuff. The employment going up. Now this is weird. That's odd. That's pretty big to see employment going up with jolts coming down. These reports don't match each other at all. But this is a single sector though, so that could kind of say that maybe the non-manufacturing sector is the area that's actually hurting the most. This isn't a good report, guys. It's not that good. Now again, good is relative to what I perceive. Wall Street's going to behave based on the time frame they're interested in. If you're looking at as far as your own shadow, like most traders do, that they're going to try to estimate behavior of the Fed right now. So the thing that matters most of the Fed is employment situation and inflation. Unit labor costs. Let's look at these numbers really quick. Those going up isn't a good sign for Fed. Now, we had some big numbers last time around. Actuals came out at 4.2. Where we are now. Hold on. May the 4th. Why does it say 3.2? Oh, it was adjusted? Wait, hold on. Oh, revised. Okay. So actually it was revised to 6.3. So cost of labor going up again is very interesting. So let's think about this. This means inflation's going up. It means Fed's going to raise rates still. If you want to piece that together. Okay. Let's go back to some other things. Now this is depending on the environment. This thing should be worth 3 stars right here. Non-farm productivity. It's a construction spending. That's a pretty decent beat. It could be seasonal, right? Beginning of the summer. A lot of people start building in summer months because it's not snowing in places. So it's hard to say. It is a huge beat. I agree. Could just be seasonal, right? And heavier winters usually see it like slower. I don't know if this was really a heavy winter. I feel like this was kind of a mild winter. Y'all tell me that. Let's get Rocket Scooter front and center. So this could just be seasonal effects. As we are leading into the summer months. I'd say overall, the report isn't hinting at anything good for the economy. The report is hinting at also potential small rise in inflation, which will lead the Fed still having rate hike fever, baby. Resilience has improved. Construction spending, as Jason said, yeah. Overall, like I said, if we're above hedge pressure, I'm back to longing this. Resilience trying to make a move for it. We are still to the downside on the SPY hedge pressure break. We're still irrational. If anything, if I were to make a trade today, it's almost like, okay, you decide how you perceive the next day or two. This is not bullish enough to make a decision. Anything above here, to me, is a long for a bigger run. Anything down in here, clearly, as we said earlier today, if you guys remember, I can pull all these things off. Maybe I still have the same drawings on here. I like clicking this button a million times. But you guys remember, resilience above 0, resilience less than 0. When I showed earlier today, you'd have that bull zone to the middle. And then I said, usually it takes all day. We had an event today that helped us out, but it would kiss the bull zone and come back down. More often than not, we do close up in here as long as markets are rational. But didn't we nail this today on the stream? Didn't take the trade just because obviously it's just a 10-point difference. I'd rather take the HP break. Makes a lot more sense. Exilio took a nice little scalp there. That's awesome, man. Resilience starting to heal itself here, interestingly enough. I don't know if I want to play with this too heavy today, though. Definitely curing itself up. When in doubt, just sit out. That if you got lucky and got a scalp from here to here, that's a beautiful trade. That right there was DD textbook 101. Drew that one from this morning, right? Louis took a scalp from there, done for the day. Oh, nice. You guys, man, y'all are so good. I love it. See, that's the best part. I am not like, how many people go out there and join trade rooms, right? Or communities or whatever. And they're waiting for someone to call out. What do I do? Help me get rich, teenage kid. I watch you on TikTok. Help make my dreams come true so I can provide for my family. Stupid, right? I'm not even telling you guys what to do, and y'all fundamentally understand trading. What trading is about. Day trading is not picking direction and being right about the stock market. It's exploiting supply and demand imbalances. and trading from somewhere to get a balance. Louis, I'm at the bear zone, out at the bull zone, in and out. It's like I can see how you understand how trading works. To me, that makes me proud. Makes Papa Bear proud that y'all are learning how to fend for yourselves in the stock market. You make smart decisions. You know your uncertainties are there because of the irrational market. You have an event, you're in and out quick. Like that really shows that you guys are getting a grasp of how the game is played. It just comes down to waiting for other opportunities that are just like that as the years go by. Very proud of y'all. You're really understanding why markets move. You know, you can understand that every red day, I'm not chasing red candles because committed traders and many other reports show the market being extremely liquid, right? So I know that upside and downside is very short-lived. We still got a very nice bullish monthly map as the months go by through the middle of the summer. So everything's looking pretty good on the bull side of things, but it doesn't mean I just trade the market like I rally there all day, every day. It's a little messy around those FOMC days. Look how that volatility starts to spread out. But in general, we're still... Interesting to see QQQ dynamic change. QQQ used to be stronger till the end of August than it is now. It actually has a weaker spot middle of June till the end of June. Last I remember, it was weak for a little bit, then it got better, and then it really got drastic. So you can see that the bull confidence is still there, but it's not as strong as it was. I think people are starting to change their mind a little bit. It's still bullish, though, through the summer for Qs, interestingly. So reading monthly map is a new skill set. Obviously, if you don't know how to do it, just go through and watch the video. It's pretty cool how that works. Then Russell, obviously, is not giving us a really clean look at all. It's relatively not super bullish. Bear side squeezing a little bit. And of course, the Russell has been rallying like everything else. So it just kind of shows that the Russell might experience a little bit of a short squeeze through here, but not a lot of genuine buying. So I think the Russell's destiny is to have a quick pop as the shorts cover. Let's look at some stocks here. I love monthly map. That's beautiful. Now the index, right? Index can have a lot of data because you have the 0 days on there. These nice little weeklies on Tesla. Bull side getting stronger, bear side getting weaker. All stocks. All the big stocks are looking like that. Let's look at some sectors too. Same thing. Nvidia, bullish from here. It's been like this all year too. The same shape on these maps. And even banking. Like banking is looking really strong as well from here. I love what I see. Definitely love what I see. My favorites. The energy sector ETF. We got a monthly map on that. Energy not as strong, but still strong. So nothing is really like deteriorating, except for financials look a little weird. Financials have illiquidity pocket right here in general. So you can see how the financials don't have that nice clean look to it, and that's just because of the dynamic of what we're in the recession. Right? Financials are very damaged where we are. So. Kind of like a weird couple of weeks, and then it looks like it becomes illiquid. So this is going to be choppy. Yeah, it's looking all right. Oh, Roxy investing you ever scared? Y'all are too nice. Just wait till our next set of tools come out. Trust me. As we keep developing, there's so many things we're making. It's very exciting. Look at QQQ really quick. Resilience is not getting any oomph from here. Honestly, like, I don't really think I like what I see today. Dynamic volume profile? Like how... Oh, that'd be kind of cool. Where it's like showing where a volume profile could be. Like, in the likes of looking like a volume profile. Interesting to draw that somehow. Okay, give me 1 second. I'll be right back. Well, that's looking pretty decent. Resilience can have a little bit of a delay just because of the irrational. But it is not terrible. It's bullish-ish. Back to where we started. Market's kind of back to normal. But I certainly wouldn't be shorting this. I was thinking about buying the dip off of here just to trade it back to the middle. Because it was 10 points, I didn't want to fudge with it too much. Be right back. All right, I'm back. Sorry. Took a step away for a little bit. Okay, analyzing this market. Things are getting a little better. I do like this now. It's looking pretty solid. Good DD band trade could still be one of the trades you see. Question is, bull long up, holding above hedge pressure, looking like it's solid. What if we take a little long here, maybe? Take a little long on the hedge pressure bounce here. Let's see. It's still looking pretty good, I think. And the question is, trading upper DD band be kind of nice. Yeah, I like that. Just small though. Yeah, anytime it's yellow, I still use those rules. Like it's like really, it looks really solid now, doesn't it, right? And maintain this one. So yeah, DD great, resilience great. In all honesty, you have this is a very easy day to read from here. I mean, it's gonna, if you're wrong, it's very clear to see where you're wrong at. Just waiting for a little pullback here. Why is this picking blue? Let's pick here. So obviously, like, right. If you're trading back down in here, I'm not gonna play with this anymore further. So obviously I'm stopping like on the other side of the middle. Like if we start falling down here, I'm stopping. Where it can go from here, DD band top. All right, possible. Always measure. There's nothing in the way. Let me show you guys really quick. And it's kind of not the safest of plays, but it's a possibility, right? So the R&R is there to at least take a small stab. It's probably just get a little position here. It's a 30-point possibility, not saying it's likely, but 30-point possibility. I am very bullish for what's really going to be like a 5-point stop, right? There's not much downside here. And they're all kind of in the middle equally, so it's like you've got a pretty clean view of the market and volatility is deteriorating, right? So, you know, ideally, if this were to collapse, it'd be catalyst or debt ceiling related. So I need to keep my ears peeled, but there's no mechanism for this just to crush under its own weight. Like the commando traders is bullish. This is volatility's decay. UVXY is in a bull setup, or sorry, bear setup. So like all things are looking good for this to not be volatile. So if I start seeing waves bigger than this, then that's going to scare me. So waves like 98 to 88, like 10-point moves. If this starts falling 10 or 15 points in a row, picking volatility up, something's going to be suspect. So I'm expecting us to just dip, 10 points the whole way up. And so it's about a, like a 6-to-1 trade, or at least for the full run of it. So somewhere like right here in the middle, I'll be just kind of curious of that limitation. So we'll see. QQQ, so we'll check where all those places are. QQQ and resilience back below 0. So it's like a little flip-floppy. But small position, that's okay. Hopefully this doesn't try to sell off. Because there's really no doubt. There's really no support anywhere else. Yes, let's try to figure out which stock that is. Let's look at half gap breakdowns. Let's find out which one it is. Up here, half gap. Tesla. Let's look over here. Let's go to the volume in this. I wish one of these days I want to be able to survey market cap. That'd be kind of nice. Intel. No. I want to see something that's like right on half gap. Ford. No. It's in both of them, so it's going to be one of the big tech. Wasn't Nvidia? No, wasn't it? Tesla. Microsoft. I knew it was you. Why are you not showing up on the list, boy? Oh, because half gap breakdown is not. It's looking at the initial condition. It's not a breakdown when it does this. I need to find a way, a new type of. So breakdown was designed to see like from the opening condition, not the last state, which I think I want to change that because like I want to be able to easily find Microsoft on the list. There it is. This is the one. You know it's going to be one of the big techs because both the S&P and Nasdaq are doing it. So welcome Microsoft to the party. Player 2 has entered the game. Let's go. There's that sensitivity right here. Right, so looking at this, half gap. Oh, because I picked hedge pressure breakdown. That's why. Okay, let's work a little slower here. Okay, now is Microsoft gonna be here? The reason it doesn't show up, this is not an error, but this is a design how we did this. So if it opens below and it is below, it's not considered a breakdown. The only case this can have is a breakup case from where it opened. So we need to create, actually this is like not exactly the intention of half gap breakdown. I want it to be from the last state. So an example state is below, 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 break up. If break up, it can only break down if either open above or in break up. So break down, break up, break down. I'd want it to appear in both of them. So we have one that goes both ways, but it's not directional. So I can do like half gap break in general and remove the up or down. It's not looking good for the bounce here. I don't like it. Not looking so hot. And then you'll see a mix of downs and ups. But it's not considering Microsoft a break because it opened below and it's currently below. So that's like a something I want to change because I want to be able to see on the fly like what stock is causing resilience to bounce around, right? Oh, my bad. My bad, sorry. Okay. So Microsoft is the one that's causing the issues. Sorry, right here, I was on the wrong screen. You can see that sensitivity of resilience has everything to do with Microsoft being above half gap and below half gap. One stock kind of tilting the scales here. Oh, excuse me. Oh, that was gross. So essentially, it didn't show up on the scanner. That's what I was talking about. We have a way you can scan for called half gap break up or down, and half gap break in general. Either way. So since Microsoft opened below half gap, it's not considering this a break, even though it broke up and broke down. What we define a break as is from its opening state. So it can only like, if we were to flag, like I want it to show up on the scanner so I can quickly know which stock it is, so I have to dig for it. This is considered a breakup and then no longer a breakup because it opened below. What I wanted to do is to have this state here. If like Microsoft open here, it's just below half gap break up. Then once you break one way, it's able to break all ways. Break up, break down, break up, break down, break up, break down. What Microsoft currently does is it's Nothing, 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 break up. Nothing, 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 break up. Nothing, break up, nothing. So it doesn't do like the flip-floppy cases. And I want to create the logic to do that. It doesn't show up on the scanner. The more I use this, the more ideas I come up with to help out. But I quickly can narrow it down because you see resilience looks the same. It's similar magnitude. They pivot at the same time, the same amount. It's telling you that it's really one big stock that's common to both of them. And you immediately go to big tech to see what it is. And you look for something that's in the redistribution zone. And Microsoft is that one trade. Would I close if resilience switched back to negative? If resilience started to consistently press -10 or lower, yeah. To be very careful today on hedge pressure breaks, right? Now, again, this is about where I'm analyzing, do I like this trade or not? And if there is a dip, it's here and only here. And if it doesn't work, then it doesn't work. So opening above hedge, it's going to want to close above hedge and close in bull zone, hopefully. So we'll see if that works. Follow up with my development team really quick. Yeah, I don't think that the debt ceiling is gonna not be raised. I know they had like a partial deal or something. How'd that work? I missed the last couple of days really of news. I have like a killer headache for some reason. House passed. Ah, okay. So that is where we are with that. I like what I see. Things are looking pretty good. That resilience popping up. I like that. I like it. I don't dislike it. What are you guys thinking right now? Are you going to take hedge pressure plays? Are y'all going to do anything? You're going to chill? I like it. Looks good. Setup's good. Risk and rewards there. I don't dislike it. Let's see, take an event really to kind of kill this. I do like that Vixen decay. I mean, signs are looking pretty okay. The hedge pressure breaks both failed. Both cautious. Be careful on the downside here. Might take all day. Yeah. But at least I know that we're likely to close here. Bull zone, like we said, like I pointed earlier. It's more likely to want to close in the bull zone than not, but we'll see. This is that hurdle it's got to get over. Resilience keeps jumping up and down. Microsoft. Let's take a look at that. Must be another stock as well. Yeah, it's Microsoft. That's the one that's right on the edge. You can see resilience is very much. You see how one stock has everything to do with that balancing point right now. Isn't that cool how resilience works? Tells you which stock is like the important one. That's what I like about it more than anything. Hopefully we can get a good luck on this one. Again, a lot of progression on our futures projects, so this is looking really good. I'm just reading some of this stuff. Rocket Scooter now. I forgot to make an announcement, but we're well beyond our 4,000th customer account now. 4,058. Last time we pulled up on the stream, we were like 39 something. So 4,000 user accounts for Rocket Scooter since in less than a year. Well, actually, it's been a year now. It's like our 1 year-ish anniversary. Along with HP, put an option or came through for some premium about 5. The outside options have been helping you decide when to pull the trigger. Udry, like flow and hedge pressure or flow and Rocket Scooter stuff together. Very hands down, like such a good synergy. I'm good friends with a bunch of people over the Black Box crew, and like a lot of them use Rocket Scooter and Black Box right next to each other. Rocket Scooter is like, here's the plan. Let's get there. Okay, what's the flow look like when we get there? Put the two together. Bada bing, bada boom. Yeah, well, that's the whole thing is integrating flow. I'd rather you, instead of build like what everyone else does, you know, and enter like a very massively saturated market of features, I'd rather just incorporate someone else's tech into our platform to make it easy. Like maybe I can get a developer license, an API, some data from somebody, and a widget for Rocket Scooter as an add-on for y'all if you want it. Be better than us wasting our development dollars and time building something else that everyone else has gotten perfected. That's common. What is SMC Concepts? I've never heard of that. Did a large market cap order over under hedge pressure alert mock-up in wish list. I like that. I like that a lot. Congrats on so long ago you're reaching for 1,000. I know. It's been an incredible journey. Our forecast is by the end of this year we'll have 10,000. Because we have some really big partnerships that are about to kick off. Fingers crossed. And these are big, so. Futures project going very well. I created a testing plan for them. For all the things that I know we're gonna need. Oh, how my trade's doing? Oh, that's good. Killing it. Love it. 2,000 bucks profit so far. I'm gonna hold for the rest of the run or just kind of close out. Let's go back to SPY. Let's go, baby. 4,200 tap again. I think it's pretty good. I'm probably gonna hold. Just Nate, what is SMC? Never fill me in, enlighten me. Oh, yellow line. Good call. Hold on. Good call. Thanks for reminding me. I love you guys. All right. 4221. Ooh, baby. Let's go. It's okay. I'll just take the profit. Whatever. Got meetings today. I should hold a runner until I should hold a runner until DD ban more appropriately, but I need to go in a little bit to a meeting. There's my trade. That's my 10K to 100K account. Still cracking. Still like 2/3 of the way there, give or take. 2,000 today. I've had 3 consecutive $2,000 days. Yeah, I remember last couple of days I was trading on my laptop. Back to back to back. Killing it. Loving it. Oh, wait, I didn't show you. Hold on. Oops. Oh, I'm such an idiot. There you go. I just trimmed out on that candle. I normally hold a runner, but I have this really rock solid rule of if you're busy and you got a meeting or you got something you got to deal with, don't try to trade. The runner should go up to about another 15 points from here. So yeah, it's a good setup. Like I said, things are looking solid. We still go higher today. I think I didn't. Yeah, I probably clicked too earlier. That's okay. I don't like to trade when I can't watch it. So I gotta go. Love y'all. Sign up for the Rocket Scooter extended trial. 3 months, $35 a month. Like I said. Oh god, that's loud. You try out the platform. We have so many exciting new features coming in. Make sure you do that and make sure you upgrade during your trial because you will lock in that low price and you get all these additional things they're making for free as your price never goes up as part of the deal. That's the whole point. We're going to be developing technology as the years go by. More and more and more technology. We are racing away from the perils of the old school technical analysis being the only thing you have at your disposal. We're now revealing positions of market makers and the big money to you. Now you can make smarter, more educated decisions because you know where Wall Street's positioned. Don't look at the history of price, shape, colors, patterns. You know, put your bucket of crayons away. This is the time that you now have a magnifying glass, look over the shoulders, Wall Street, and see what the sum of everybody's homework is. Make more educated decisions when you know everybody's positioned. That's the Rocket Scooter motto. Actually, we don't have a real motto. That could be one. One of them. So we really want to show you and put the power of institutions in retail's hands and give you that next generation of analysis type. Thanks for tuning in. Hit that like button on the way out, and we'll see you tomorrow. Bye-bye.